and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the very program. Now, in case you're here for the first time, the WhatsApp number is flashing on your screens. This is where you send me all the queries that you have regarding the stocks in your portfolio. Don't forget to mention your own name, location and your contact details, as we can give you an opportunity to speak live to our top market experts and get a custom-made advice for yourself as well. Now, what we can also do is take some questions on our YouTube. In case you're watching our show live on our channel YouTube Business Today, then go on to Daily Calls Live and then use the comment section there to send me your questions. I'll be happy to pick up some of those questions to address it with our top guests. In fact, let me quickly now look at some of the viewers who are joining in early on our YouTube channel. We have Anuj Singh, Shubham Malik, Aarti Jain joining in early. Welcome to all of you. We have also a lot of our viewers who are joining in on our WhatsApp with their questions. So welcome to everybody. Let me also welcome our guest now, Mr. Nilesh Jain, a favorite on Daily Calls show, is actually joining in on the show with us to share with us his views as far as the markets are concerned. He's from Centrum Broking, as all of you know, tracks and heads the technicals and derivatives coverage there. Nilesh, welcome to you. Good to have you with us as always. First up, a quick look at the markets and help us understand. We are again seeing some pressure develop. We were at 26,120 odd in the morning, and then we have come off from that peak a little bit. So is the selling pressure at higher levels still sustaining?
Very good afternoon, Sakshi. Absolutely. So if you see Nifty, Bank Nifty, the benchmark indices, which are although trading in a positive territory, about 26,000 for the Nifty, and Bank Nifty is comfortably trading above 59,000. But you need to see the broader markets where the major pain can be seen in both Nifty, mid cap and small cap. Specifically, Nifty small cap index is underperforming. So looking at the overall setup, looks like we may see a follow-up move to continue on the lower side as far as Nifty small cap index is concerned. The overall structure is looking slightly on a negative side. Now, coming to the Nifty index, we may see some bit of consolidation since tomorrow we have a monthly FN expiry for the Nifty index. So quite possible that we may see another tick on the upside on the back of short covering in the Nifty. So the range from tomorrow's expiry point of view looks like 26,000, 26,200, and Bank Nifty also looks strong on the chart. Given the kind of setup we are witnessing in the index heavyweight counters like HDFC, ICICI, Axis Bank, specifically this particular stock is looking strong on the chart. So we can expect a move towards 59,500, 59,600 in the Bank Nifty. Overall, it's kind of a stock specific market, but it's better to avoid taking any contraband in the small cap index, benchmark indices. In fact, large cap stocks are looking comfortably better place.
Okay, fair point. Let's actually start taking some questions, Nilesh, and then we will come to your top choice of stocks also in the show. We'll take the first question from Anuj Singh, and this one is on Vedanta. Anuj says, good afternoon to all of you. Good afternoon to you as well, Anuj. He says, Vedanta का share 266 पर लिया हुआ है, 500 shares हैं, इसमें 88% तक का profit भी हो रहा है. अब मुझे क्या करना चाहिए? तो सबसे पहले तो आपको बधाई, Anuj, that you are sitting on good amount of profits on Vedanta. And this, of course, has been a company that's in limelight because of the ahead coming in demergers, and that's the key big trigger that everybody is clearly watching out for. But you're sitting on a good amount of profit, and it's always good to take a view as to what should you be doing with your profits at this stage. 88%, nearly 100% kind of a profit. What would you say, Nilesh?
Well, Sakshi, first of all, congratulations for holding good stock in the portfolio where you're getting close to 100% kind of return. Now, I assume that he must be holding it for a longer term time frame, given the kind of a structure that we are witnessing in Vedanta. The structure looks strong, and we can expect a further uptick to continue gradually towards 530 and 550 on the upside. So, look strong. Stay put will be the advice in this particular counter. But here I would advise to keep a strict stop loss at 478. So 478 was the major breakout level that should act as a crucial support now, and keep a stop loss near about those levels and ride this momentum up to 550, 580. Gradually we expect this counter to move on the upside, and overall we are bullish on the metal space as a whole. So given the kind of setup we are witnessing in Nifty metal space, I think this rally is likely to continue.
Okay, let's take the next question now. This one is from Shubham Malik. He says, Hi Sakshi, good afternoon. Good afternoon to you as well. Shubham says, I'm from Bangalore. I want to know about PGEL at the current levels also, if this can be advised to invest in at the current levels for the long term, that is. Okay, we'll definitely look at PG Electroplast. 580 is the current level. Almost 2% of a downtick is what we have seen on this one. Although in the last 1 month, there has been some recovery, because in the last previous month we had seen a lot of volatility on the stock and a sharp downturn as well. In fact, in the month of post August, we had seen some sharp fall on this one. Let's find out on PG Electroplast. Would you advise a current price buy?
Absolutely right, Sakshi. So we have seen a big crack in the month of August. All the way the counter corrected from the levels of 750 to 500. Now, given this kind of structure, and even if you see this calendar year, the stock has underperformed the most. It has continued the formation of a lower top and low bottom. So, looking at this kind of structure, there could be possibility of some bit of a time-wise correction to continue. If somebody is looking to make an investment from a longer term perspective, then I would advise to buy in multiple tranches. One portion can be bought in this range of 560, 580, but there is still some more room left on the lower side. So 520 will be the next important support to watch out for. That could be the next entry point. So given a time frame of more than 1 year, one can look for an investment. But purely from a trading perspective, it's an avoid, because the structure from a short term perspective is not looking that promising.
Okay, fair point. Let's take the next one then. Aarti Jain has asked us the next question. She says, I am holding BHEL shares in my portfolio. I have about 790 shares priced at 291. I can hold it till the upcoming budget. Would it be advisable?
Looks like there could be possibility of a gradual up move from here, because the stock recently gave a breakout. Then we are witnessing profit booking now, and on the lower side, it has a very good support of its 21-day moving average that is placed at 270. So keeping a stop loss below 270, one can stay invested in this particular counter given the kind of time frame of 2 to 3 months. I think there is high possibility of further upside towards 300 plus can be seen in the near term. So overall structure looks positive, but if at all you see any correction in the market, and that definitely will affect this counter as well. But overall positional structure looks strong.
Okay, let's take the next question then. A lot of our viewers are actually joining in on our WhatsApp as well and asking a lot of questions there. So we'll pick up some of those questions too. This one is from Meetika. Meetika says, I have bought Coal India shares in my portfolio at 419. Could I please get a suggestion of where can I shift out from the current position to, because the stock is not doing much. Coal India, yes, you're right. For some time it has been consolidating quite a bit. In fact, last year in 2024, the stock had shot up substantially. And after that, this year, the stock has practically done nothing. 374 is the current price. It's also come down from your own purchase level of almost 420. So you are facing some losses there as well. Nilesh, what will be the suggestion?
Actually, last 1 year has not been so good for this particular counter. We have already seen a gradual decline. With that decline, the counter has also corrected 1 year of time-wise correction as well as price-wise correction, but there are no signs of reversal yet. So it's kind of a sell-on-rise structure as of now, till the time it doesn't take out 390, 400 levels on the upside. If at all you get any pullback towards 380, 390, use that pullback to exit. If bought it from a short to medium term perspective, because the structure is not looking that good. On the lower side, if at all it breaks 370, then it may slide further towards 360 and 350. So overall, I would suggest to exit on pullback.
Okay. Let's take the next one. This one is from Satya. He says, Hi Sakshi, good afternoon. Good afternoon to you as well, Satya. He says, I want to know whether I can enter Kajaria Ceramics from my current position in KEC International. Well, Satya, you haven't mentioned whether you're in profits, whether you want to switch for better prospects, or this is a place where you're feeling stuck at currently. But let's try and overall understand what are the chart patterns suggesting to us on both KEC International and Kajaria. Maybe that will help you take the decision. How would you explain that, Nilesh? We don't know the details of the current position at KEC International, but looking at the charts, what would you say between KEC as well as Kajaria Ceramics, completely from different sectors, what would you advise?
Absolutely, Sakshi. So both are from different sector, and both the stock has a kind of a bearish trend. So it's
Okay.
very difficult to comment whether it's advisable to switch to Kajaria from KEC. But yes, let's look at KEC chart first. The stock has given a breakdown recently. There was a big gap down opening in the previous week. So structure is looking weak for the KEC. So it is advisable to exit from KEC on pullback. Because the counter is slightly in the oversold territory, there could be possibility of some bit of rebound and use that pullback to exit from the long position. The short to medium term structure looks negative. Now, talking about Kajaria Ceramic, it has a similar structure where it has given a breakdown recently from its all short term moving averages. The only support I can see on the chart is at 1040. That's the long term 200-day moving average. So if it manages to defend the same, then there could be possibility of a rebound. But if it breaks below the same, then it may slide further towards 960 and 900 as well. So again, not looking that promising. Kajaria Ceramic as well. So better to wait and watch for some time being if you want to invest in Kajaria specifically. Otherwise, it's an avoid.
Okay. Let's take the next question. This one is from Teja. He says, I want to know, can I invest 2 lakh rupees in Laurus Labs for the next 6 months? Kindly suggest the same. Okay, so he wants to invest a lump sum amount of money. 2 lakh rupees in Laurus Labs. His time horizon is 6 months. Would it be warranted, or should he split his money in some other stocks?
If total investment is being done in one particular counter, then definitely I will advise to split it out in other sectors as well. But if he's already having exposure to other sector, and specifically in this counter, if we want to invest 2 lakh rupees, then my advice would be to buy in two tranches. One tranche, yes, can be bought at current level because already the stock has given a good momentum. It is trading well above its all long-term, short-term moving averages. Recently, we have seen a new record as well. So the momentum looks strong, but there are high possibility that stock may witness some bit of profit taking. So you should have some money left in your hand. If at all you get a dip towards 900 or 850, that can be used to buy the second tranche as well. Positional target in this particular counter comes somewhere around 1100 to 1300. That's 6 to 8 month kind of time frame. And the major structure, yes, that looks positive. But at present, the risk and reward is not looking that favorable. So that's why we are advising to buy in multiple tranches. You might get the lower levels as well for the second entry.
Okay, let's take the next question. This one is from Ramesh Babu from Andhra Pradesh. He says, 1000 shares is what I have of CG Power. I bought this at 780. Could you please guide me both on the short term as well as on the long term? What can I expect on CG Power's performance going forward? So 780 he purchased. Currently the stock is at 692. It slipped below his purchase price. What can he expect?
First of all, from a very short-term perspective, the structure is looking on a weaker side. It may slide towards 675 to 670. That's the immediate support of long-term 200-day moving average. But just in case if it breaks below the same, then it may slide further towards 620 or 600 as well. So first, keep a stop loss at 670 if bought it purely from a trading perspective. And from a positional perspective, I believe if somebody wants to stay invested for more than a year, then it's a good bet. But you should average as well on the lower side. To advise from a short-term perspective is looking weak. But yes, from a positional perspective, 1 year plus time frame, one can stay invested, keeping a stop loss below 620. And you might get a pullback towards 750 in the near term. And positionally, 1 year plus kind of time frame, I think the stock has the potential to move beyond 800 as well.
Okay, got that. Let's take the next question then. And this one is from one of our viewers again on our YouTube. We have Muthailu James asking, saying, I'm from Hyderabad. I want to take a fresh entry in Mazagon Dock shares. Could you advise at what level should I be looking at this one? Again, the shipbuilder space, the defense space is also coming back into limelight of late. A lot of defense related orders are being talked about. A lot of reforms are being done. Any suggestion on Mazagon Dock at the current levels, or do you think the stock is still going to be sideways for some time?
The stock recently witnessed some bit of pullback. That pullback got sold out, and it is facing stiff resistance of its 100-day moving average, which is currently placed at 2850. So first of all, I would advise to wait for the breakout if somebody wants to buy from a trading perspective, and from an investment perspective, I think one can go long keeping a time frame of 1 year plus in this counter. The immediate support is at 2600. So ideal buying range could be somewhere around 2600 to 2650. That can be a good entry point. Keeping a stop loss below 2400 for a time frame of 8 months plus, I think 3000 plus kind of levels can be seen. But yes, for purely from a short-term trading perspective, I think it's not advisable to buy now because the structure from a short-term perspective looks weak.
Okay, let's take the next question. This one is from Nitin. He says, can I get a view on Canara Bank? How would you look at this stock? Again, PSU banks have been coming back into flavor from last couple of weeks. Any suggestion on Can Bank?
Absolutely. So PSU banks have been in focus. In fact, since a long time, it has been forming a high up and pattern formation. So we continue to remain bullish on the index as a whole. So PSU banking index is looking positive. Canara Bank, specifically this counter, the upside seems to be open up for 160, 170 in the near term. We can see those levels. Keep a stop loss below 139, and it's a buy at current level and on declines as well. Yes, it's a good portfolio stock as well. Apart from that, BOB, SBI, Bank India continues to remain our other preferred bet within the PSU banking space.
Okay, got that. Let's take the next question, and this one is from one of our viewers, Mr. Reddy. He says, hi Sakshi, can you please tell me any buying level in Sansera Engineering? Alright, let me pull up the stock here for all our viewers to also look at the share. Currently, the stock is hovering at 1% higher at 1625. Last 1 month, the stock has in fact had a good run up, 11-12% odd. Last 6 months, it's moved up 28%. So it's in a positive trend, at least in the last 6 months as we can spot. Nileshji, what would you advise on Sansera?
Well, a very good stock. Looking at the setup, it is forming a good rounding bottom formation. A gradual up move is something that we are witnessing currently. It is also trading well above its long-term and short-term moving averages. So structure-wise, looks like it is heading towards 1700, 1750 on the upside, keeping a stop loss below 1550. It can be added at current level and can also be added on declines as well. But positional target comes somewhere around 1700 plus. So keep a time frame of 2 to 3 months plus, then yes, it's a buy on decline kind of structure.
Okay, fair point. Let me also take another view. This one is from one of our viewers. This is okay, Harsha says, Namaste Nilesh sir, can I do a fresh entry in Sterlite Technologies at current levels, or should I wait for still lower prices? I want to also know about what range will it be playing in the near term.
See, first of all, the immediate structure for this stock is looking weak. The counter has given short-term breakdown as well today. So do not be in a hurry to buy this particular stock as of now, because we may see further lower levels of 100 to 98 as well. So we may see some bit of a mean reversion happening in this particular counter. 200-day long-term moving average, which is also placed at 95. So buy somewhere near the support. If at all you get any dip in the range of 98 to 100, that can be a good entry point. It has a next support level at 90, that should be the stop loss. And the range, the broader range, I believe could be somewhere around 85 to 120. So that can be a broader range. We may see this particular counter oscillating for next 3 to 4 months.
Okay. We have this question coming in from one of our viewers. Okay, we have this question from Namish. He says, I'm a big fan of Business Today daily calls show, and I'm a daily viewer of the show. Thank you so much, Namish, for writing in. The question he has is on two stocks, Nilesh. One is Flair Writing, and the stock at the price at which he bought this stock is 300 rupees. The other one is National Fertilizers, NFL, where he took an entry at 97. He wants to know whether he should continue to hold on to what he has, or should he enter again and average out his position.
Well, first of all, looks like a recent purchase in Flair Writing. I would suggest to stay invested with your existing long position. Do not average for the time being, given the kind of selling pressure we are witnessing in broader markets. That's quite likely that these stocks will also witness a similar correction. So as of now, Flair Writing has a next support at 280. Keep a stop loss at 280. Stay invested. If at all you get any pullback towards 310, 320, use that pullback to book your profit and exit from the long position, because the major structure is not looking that promising. Coming to NFL, it has a weak set of structure as of now. It has given a breakdown below 90 level. So 90 was a very strong support, which will now act as immediate resistance. On the lower side, it may slide further towards 82 to 78 on the lower side. So again, a sell and rise kind of structure. If bought it from a short-term perspective, if bought it purely from a longer-term perspective, then yes, NFL and Flair, both the stocks one can hold. For NFL, the stop loss comes somewhere around 84.
Okay, let's take the next one then. This one is from one of our viewers. Okay, Ankur, he says, Sakshi, which one looks better to invest in the retail space? Vishal Mega Mart, Trent, D-Mart. Which one would you advise at the current level? So, okay, Ankur, I'm guessing that this is for your long-term investment that you're looking at. Let me try and find out where the trends look more positive. Vishal Mega Mart, Trent or D-Mart. Well, these retail stocks have in fact had a slow moving zone. They've been in that kind of a zone in the last 6 months to 1 year odd. Any suggestion?
Well, all the three stocks are in fact in a downtrend and looks weak from a short to medium term perspective. VMM, DMART, in fact, both the stocks are looking slightly on a weaker side. As far as VMM is concerned, it's an avoid because looks like it is heading towards 125 to 120 on the lower side. Coming to the DMART, yes, this particular counter has already witnessed a long time-wise correction all the way. If you see, since 2021, the stock is oscillating in the range of 3,000 to 5,500, and looks like this time-wise correction might over if at all it breaks 4,500 on the upside. So this particular counter one can look for and can be added on declines as well, keeping a stop loss below 3,500 because it is trading somewhere near the support level. So from a risk and reward perspective also looks positive, but purely from a longer term play, from a short to medium term perspective, all these three stocks are looking on a weaker side.
Okay, let's take the next one. This one is from one of our viewers again on our YouTube that we have, Roshan Pradhan. He says, any suggestion for the long term I can enter into IGI? So he's talking about that gemological institution share that got recently listed. It won't have a too long history for you at this point in time, Nilesh. International Gemological Institute of India, 321 currently. Any suggestion?
Well, Sakshi, the stock post-listing has witnessed a sharp decline. There was a bit of a pullback, but that pullback was unsustainable, and again we have seen selling pressure at the high level. So, not looking that promising. I won't advise taking any contract at current level. I would rather wait for a breakout above 370 that will give me more confidence to buy this counter. But as of now, it's an avoid. If at all somebody wants to take a long position, then keep a strict stop loss at 295. And a pullback may be seen towards 350, but a breakout over 370 will give more confirmation.
Okay, let's take the next one. This one is again from one of our viewers, Mr. Lalit. He says, I want an overview on JM Financial for the next 3 years. What would you advise here?
See, from a next 2 to 3 year perspective, it's a very good bet and can be added in the portfolio in a staggered manner, because as of now, as we have been talking about the pain in the mid cap and small cap space, so this particular stock will also witness a similar selling pressure. So ideal buying range could be somewhere around 120, 130. But I would advise to buy in multiple tranches. From a positional perspective, it has a potential to move towards 200 plus as well. So that's a 2 year plus kind of time frame, and keep a stop loss below 110.
Okay, let's take this next question. This one is from one of our viewers. This is the last one that we will take from you, Nilesh. Then we'll jump on to your top choice of stocks. Okay, this one is from one of our viewers in Gurugram. Kalika Dham says, I've bought DCM Shriram Industries at 110. It's at 171. So I want to know, should I hold on for next 1 week also? The stock is in uptrend. Today also 4% higher, the day's high level. Is another weak trend positive so that one can look at making some more profits?
Right. So today, in fact, we have seen some bit of rebound as well as a breakout from a short-term consolidation. It has a very good support at 162. So first of all, I would advise to keep a strict stop loss at 162, and it has a potential to move towards 180 from a very short term perspective, and a breakout over 180 will give another level of confirmation. Then probably we may see the levels of 190 to 200 as well. So very good bet purely from a trading perspective, and one should keep a stop loss at 162. That's immediate support for this particular counter.
Okay, fair point. All right, Nilesh, let's try and understand from you your top choice of stocks then before we let you go.
Right, Sakshi. So the focus has been shifted towards the IT pack, and Nifty IT index seems to have formed a bottom formation, and we are witnessing a strong rebound and a momentum as well. So overall, we remain bullish on mid cap and small cap ITs. Emphasis is particular counter is looking positive. Emphasis, which is currently trading at 2800 plus, it has found a very good support at 2620, and looks like it is heading towards 2920 to 3000 levels on the upside. So one can buy Emphasis, keeping a stop loss below 2770, and upside can be seen somewhere around 2900 to 2950 from a short term perspective. Another stock that is looking positive is Card Trade. We have seen a very strong momentum in this particular counter over past few months. Recently, we have seen some bit of decline. It has a very strong support at 2980. 2980 should be the stop loss. One should wait for some bit of dip towards 3100 to 2990. That can be a good entry point. And on the upside, 30 to 50, 3300 kind of levels can be seen in the near term.
Okay, got that. Let's take the next question. Okay, thank you so much then, Nilesh. We'll thank you then for being with us on the show and of course helping out all our viewers address their queries as well. Always a pleasure to host you with us. Viewers, we'll jump on to the next question with another of our guests who's joining in. Kush Godasara is with us, market expert who's going to be sharing with us his views on the markets and to answer your questions too. Hi Kush, warm welcome, good afternoon. Before we go on to taking your own view on the markets and your top choice of stocks, we have some questions coming in. So we'll quickly address those and we'll jump on to your conversation too. This next question that we have is from one of our viewers, Sakshi Pal, says, I want to know about two stocks, GPPL and Edelweiss, both from the different sectors, and wants to know, can I enter into both these stocks at the current levels? Although the time horizon she is not mentioned, but Gujarat, Pipavav Port and Edelweiss from the capital market space.
Hold on for the long term, but currently charts look little bit cautious. Since last 3 months, we are in a range of 107 on the downside, and on the upside we have 120. So I think Edelweiss is a stock which we should avoid. But on the other side, if you are a long-term investor, once we break 107 on Edelweiss, start accumulating. So don't buy at current level, but some correction below 107 would be an opportunity to invest for long term. GPPL, I think, yes, stock is looking strong, but volumes are missing on the downside. So I think we need some volume momentum on GPPL. Yes, I won't recommend to exit, but let's wait for some confirmation on upside. If we see some move above 185, GPPL will be a good stock to enter. So for both the stock at current price, you should just be on the sidelines.
Okay, got that. Next question is from Satya. He says, I want a view on Apollo Microsystems for a fresh entry. Is it still advisable? One of the outperformers in the defense space of late. Any suggestion for a fresh entry?
Definitely, stock has given a good performance, but I think technically stock is in the correction zone. So if you look at today's price action, we are already below last week's low by 4%. So I think stock is still in a correction zone. The rally which we saw from 162 to almost 360 in just a couple of months, we are going to correct at least 50% of that momentum. So I believe we would touch 230 in near term. So around 230, we'll review it back and we will advise it again. So just wait and watch. Around 230, you can come back. So when the price is around 230, you can come back to the channel and we will review it there.
Okay. Let me also ask. One more question that's coming in from one of our viewers again on our YouTube that we have. This question that we have is again on a very space that has been buzzing quite a bit. All right, we'll take this question from one of our viewers on Okay, defense space itself, HAL and BEL that we have. The question, the name is missing from one of our viewers. This thing, but we can still go ahead and ask. Defense space, I wanted to take up because it's buzzing, and one of our viewers has asked, can one still take an entry in HAL and BEL?
So maybe unfortunate incident on last
Yeah,
week in Dubai has given us
absolutely.
some confidence had been taken out from our defense space, but I don't think that is going to happen. That was an unfortunate accident, but I believe this gap down on HL or BDL is an opportunity to invest for long term. Definitely today's closing is going to be crucial because technically if we see more downside in coming few hours, then we may see correction in HL up to 4200. But I don't believe if you're a long-term investor, you do not need to worry. Any correction in this space is going to be an opportunity for long-term investment. I believe still our defense sector is going to be strong. Our products are still going to be at par with global level. So this is just an unfortunate event. So just don't be in a panic and sell out your investments. Wait for an opportunity.
Okay. Sachin from Siliguri says, I have grow shares at 162. I want to know what should you guide me on my trading strategy with target and stop loss both. A very, few days of a history is what you have on grow, wherein we had consistent 5 days of an uptick, unabated one. We also had a problem with the, short squeeze that it resulted in the market. And thereafter the stock fell a bit. It also consolidated now at around 150 odd levels. What's your suggestion on grow?
So definitely, chart history is very thin, so I cannot comment technically. But yes, fundamentally, I believe you should not trade on grow because I believe this stock is going to be a long-term bet and it is going to be high risk. Because I believe this new age broking firms, which has low cost funda, I think that is going to give a hit in coming weeks because traditionally the traditional brokers like Edelweiss they are growing bigger and bigger and grow and something on all online platforms are working very thin margin. So there is no brand loyalty by traders. I mean they shift to a different platform easily if they get a better deal on brokerage. So I believe Grow is not a stock to trade. Rather, it's a long-term bet and it's a risky bet. At current levels, I believe it's overvalued. Around 120, 130, it would be a better valuation. So avoid trading on Grow.
Okay, got that. Next question is from Mohit from Ludhiana. He says, I have 200 shares of Container Corp. My time horizon is 3 years. I purchased it at 512. What would your suggestion be?
Definitely, this is again a good stock to hold on for a long term because we have a good dividend payout ratio, good corporate actions every 2 years. So if you're a long term investors and if you can hold on for say next 5 years, more than 3 years also, I think this is a good stock to hold. Definitely, right now it's in a downtrend, but I believe it's into a base formation, maybe more 5 to 10% correction from here, but that would be an opportunity. So hold on to your investment. Strict stop loss at 440. On the upside, I believe 780 is the target in next 3 years.
Okay. Next, we have a question coming in from one of our viewers, Basavaraj from Bangalore. He says, Good afternoon. Good afternoon, aapko bhi, Mr. Basavaraj. He says, Sri Ganesh Remedies is something that I have been holding at a price of 704. But I'm incurring a loss of 9,000 rupees. What should I do to recover my loss?
Definitely, I have not studied this stock fundamentally, but looking at the charts, the stock is downtrend since it made a high on 920. So it's almost 50% down from its high in 2025. Still, there are chances of stock going down. I believe you should exit the stock at current level. I know it's very difficult to book your loss and maybe enter into a safe zone like FMCG for long term there so that you can at least recover your losses. I believe if this stock breaks 450, we may even see 280 technically. So avoid this stock below 450.
ओके नेक्स्ट हमारे पास जो क्वेश्चन आया है ये है एक व्यूअर का जिनका नाम अगेन नहीं है इलेक्ट्रो स्टील कास्टिंग्स के ऊपर है इनका क्वेश्चन 2000 शेयर्स हैं इनके पास 160 के भाव पर और पूछ रहे हैं कि इज देयर एनी होप ऑफ रिकवरी ऑफ माय कैपिटल So I think the stock has actually begun its downtrend back in the last year, or I think around August. It went up to around 200 plus levels and then it started to slip. And in case you bought it before that, you've been actually holding it for long term to find your price again. Any signs, or should one exit?
I believe one should exit. I mean, technically, we are seeing a multi-year low, and every low is accompanied by volumes. So I believe
Yeah.
investors are exiting the stock. So definitely, I would recommend to exit. I mean, it's a pain. Maybe let it go. I don't think your. I guess his purchase price is about 200. I don't think it is coming easily. So better to take a fresh call, exit it, take a break, and then take a fresh call on some new stock. Then you might recover your capital. So at least exit electro steel casting at current levels.
Okay, next question is from Nagesh Godri from Karnataka. Nagesh says, I have purchased Varun Beverages at a buying price of 660. I'm currently under losses of about 32% of my investment. I want to know a view till 2030. Should I continue to hold or should I sell?
Definitely, you should continue to hold the stock. I believe if you are a long-term investor, yes, you can hold this investment for 5 years. So yes, we may see some downside, but that would be an opportunity to again go long. I think VBL is going, going outside India for the business, and they are getting good contracts from many beer companies. So I think VBL is a good stock for long-term investment, but for temporarily we may see some corrections. But they have a good dividend payout ratio also. So if you're a long-term investor, just hold it. If we go further down, maybe next year we can review it around Diwali and you can average it out. So just don't worry. This is just in technical correction. So hold your stock. We'll average it out when it's the right time.
Okay, let's take the next question. This one is from one of our viewers, Archana from Bangalore. She says, I want a view on SW Solar, Sterling and Wilson Solar. For the long term, should I start buying at current market price or should I wait for some correction?
Maybe you should start buying at this correction because yes, maybe still we may see some more correction, but low is nearby. That's what I feel because we are already corrected from 650 to almost 225 in just 6 months. So we have seen a good correction. So start buying, at least buy 20 to 25% of your goal of investment in this stock. Wait, if we see more correction around 175, then that could be your second point of purchase, and after that we will review it. So yes, definitely start buying today. Buy 25% at current price and 25% around 175. Then we will review it and then take a new strategy.
Okay, let's take the next one. This one is from one of our viewers, Umesh from Delhi. Umesh has a very interesting question for you, Kush. He says, I want to invest 5 lakh rupees in 5 stocks and I want to invest it today. Where can I invest? I hope, Umesh, you have a long-term view because you're investing a good amount of sum here. And let's try and find out if a diversified set of stock recommendations can come in for your long-term portfolio from Kush here. Kush, would you be able to guide him?
Yeah, definitely. So first of all, before I advise 5 stocks, I would recommend him that don't invest at one go. Definitely hard-earned money. So today you invest this 5 lakhs into liquid Bs, which is ETF, which pays around 5 to 6% fixed return, so that you don't use your savings if it's lying in the bank account. So you start buying at every dip. So 5 stocks which I recommend you, maybe to all viewers for long term at current levels are from different sectors. Of course, first is always my favorite, Eternal. I believe quick e-commerce is picking up, and also if you look at retail business is also picking up. So Eternal is correcting at in correction mode and it's in an accumulation zone. So Eternal you should buy with a stop loss of 260 on every dip. Target on the upside is 375. Second, again, I believe Auto is going to be in a bull run. But yes, technically we are going to see some correction. So on every correction, two-wheeler stocks, I believe we should buy. And Hero Moto is my favorite stock from two-wheelers. So Hero Moto on every dip we should start buying for long term. Stop loss around 5,600. Target in next 5 years is around 8,000. Third, maybe it's again a retail stock, but Trent is what I like. Studio and they are picking up their sales. Definitely currently making lower lows, but an opportunity to invest. So Trent with the stop loss of 4,000, you can accumulate. On the upside, 7,200 in next 3 years. Fourth stock would be again one of my favorite sector, which is hospitality. Lemon Tree Hotels. I believe the way travel has been increasing, whether it's leisure or business. Lemon Tree has a good opportunity because that they cater higher middle class, and that is the biggest population of India as of now. So 140 can be a stop loss on Lemon Tree. Target around 195. And the fifth stock, I will play safe. Stay with Reliance Industries. Any correction to 1380 is an opportunity to accumulate. On the upside, I believe we may touch 1800.
Okay, fantastic. So here you have, viewers, a top choice of 5 stocks. Of course, a good mix and a good, choices that you have from various sectors that you could be looking at. But I wanted to prod a little bit more on the choice that you've given to our viewers to explore liquid Bs. Why don't you share with us a little bit more detail on what is it that it makes it better for traders and investors, participants in stock markets to choose to put their idle cash from their existing savings accounts or in brokerage accounts and in fact shift it to liquid Bs, and whenever the opportunity strikes, use that money to invest in buying or selling of shares from there. What is liquid Bs and why does it make a better choice?
So, as a disclosure, liquid Bs is one of my favorite instrument in, on the platform. Why? Because, every time some investors comes to me, कि आज मेरे पास 5 lakh है, then it's when it's not a right time, then I say, okay, abhi, this is not a right time. You may invest in equities after 2 months.
Yeah.
So one of the problem they tell me is that, boss, अगर ये पैसा अगर हमारे बैंक में पड़ा रहा, I will use this, just spend it. So what liquid Bs does is, you buy liquid Bs, which is a fixed return instrument, around 5.5% to 6% is fixed return, and it gives pro rata. So every day you earn interest. So in form of units. So whenever you have some savings in your bank account and you feel that it's not a right time to invest in any asset class, but you don't want to spend it, you want to invest that money when it's the right time, then you just buy liquid Bs. It's it's trading at 1,000. That's the flat price. That's the minimum unit. 1 unit is what you can buy. So just buy it and wait for an ideal time. Whenever it's an ideal time, you just sell liquid Bs and buy that equity. So I suggest everyone to, whenever you have a small saving in your bank account and it's not the right time, you don't know what to buy, don't keep it idle in your bank account. Just buy liquid Bs and then take an advice from advisor, and at the right time you can convert that liquid Bs into equity. So that way you won't spend it and you can invest it at the right time.
Fantastic. Well, always a pleasure, Kush, to have you with us, because this is a show where investors not only get the idea about investing in their own stocks, how to deal with their own stock portfolios, but also a wealth of knowledge as to what are the various ways of utilizing the best form of the money in your banks and probably participate in a smarter way when it comes to stock market investments as well. So, Kush, thank you so much as always. And of course, for sharing those 5 stock ideas for a well-diversified portfolio also for our viewers today.
Thank you for inviting me.
All right, viewers, we'll wrap it up on that note on this edition of Daily Calls. 26,083, 16 points of an uptick. So we are just mildly up in trade. Let's see whether the last 2.5 hours we find some more strength to pull back to those days high level, or maybe beyond that, or will we see consistent pressure in today's trading session. Stay tuned with us. Much more coming up on your screens, and I'll be back for the closing edition. And of course, we will also have a special session today at 1 p.m. which will be on understanding and decoding the new labor codes as well. In case you're interested in finding out as an employee what has changed for you, as an employer what has changed for you, then do join in at 1 p.m. too.